Hello class, this is Dr. Fenton. In this video, we're going to talk about cybercrime and also see how to make computations for computing the damages caused by cybercrime. So let's get started. Here we are in chapter 15, and as indicated in Canvas, sort of skim over the first 18 to 20 pages. If you see something that catches your interest, read it in detail, but it's a lot of deep computer knowledge that we don't need to go through here in the video, but if you have interest in that kind of thing, please take your time and read those parts. I would like to jump to page 18. See if we can make that happen. Here it is. I did want to point out that in the U.S. Patriot Act, enacted by Congress in 2001, it did strengthen the U.S. cyber laws and expanded cybercrime definitions. Also under the Act, an activity covered by the law is considered a crime if it causes a loss exceeding $5,000. Now, it could be considered a crime under state law, or maybe you can find other federal statutes, but to be considered a crime under this Patriot Act, it's a $5,000 amount that you have to exceed. Now on page 19, it talks about state legislation, and again, depending on which state you're in, you'll have different laws to apply, different dollar amounts for thresholds to see what kind of crime it is, if it's a cyber crime or not. And so as states update their laws each year, I think more and more they're adding more about cybercrime. And so it's becoming more prevalent these days, so they're actually defining it better in the state law and maybe putting dollar amounts down where if you pass a certain threshold, it's just not, maybe like petty theft or something. It could fall under the cybercrime laws for that state. So you can read down through this yourself. Let's go to the next page. Now, if you want to become an expert in this area, you need to pick up a lot of computer knowledge. Digging into cybercrime to find out how it was done and then understanding the full impact of it is best left to experts. So again, being a forensic accountant, you can do even more studying and more learning and find out how to be a computer expert where you can help with cybercrime issues. So I have a list of items here that you can take a look at to see the kind of knowledge you need to become an expert in this area. Next page. Now, here, it's odd that a lot of time businesses, they don't want to report incidents that happen to them. They want to keep it private. They're afraid of losing their reputation or something. So in a lot of cases, the companies themselves who are victims of cybercrime don't report it. So it says here in Australia, they found out that 43% of organizations chose not to report cybercrime incidents. Almost half of companies don't report it. You can look at here and find out if you did have a cybercrime attack, where could you report this? And they give you websites here that show where you can report this. And it's good to report it because the government officials need to know what was done, how bad it was, and so forth, so they'll know to what to look for if it's a new kind of issue that's happened. Also, they can help others recover the losses or to at least place criminal penalties on the perpetrators. Next page. And this you can read. It gets into detail about all these viruses that have come out over the years. Billions of dollars have been lost. And here, skip. And then let's just start touching on a few topics that we're going to put together in an example in just a minute. When you're looking at cyber attacks, then there are tangible and intangible losses going on. Now, examples of tangible losses from cyber attack are destroyed web servers, routers, physical equipment, personal computers, and so forth. So actual physical objects that have been destroyed because of the cyber attack. Now, you get into intangible assets, and some jurisdictions are starting to treat what were previously intangible losses as tangible. Okay? Time losses can be a loss. If a system shuts down because of a cyber attack, then time is lost maybe by people having to find out about the attack, know what's done, and then repair the attack. That's lost money. You're paying someone to do that. So these time losses are part of the losses you need to keep up with when you're computing the actual cyber loss. Now, in this example, this is a very simple example here. We have a company that was hit by a cyber attack, and what happened here is that they worked over the weekend. They worked 20 hours over the weekend to get the system back up and running. So it wasn't a weekday. Now they had 2 salaried employees and then some IT employees. And they brought in Ted and Fred, they're hourly workers, and they helped with this. Now the administrator has a fixed salary. So if the administrator comes in, and no overtime is being paid. So if the administrator comes in on a weekend, that person doesn't get paid. That's not part of the loss. That's why it says here, fixed salary, and that salary is not part of the loss in this incident. Now, the 2 workers you brought in and had to pay extra over the weekend, those were losses. That was actual cash going out the door. That's part of the loss. So what we'll do here is just take their direct labor, 20 hours, they're paid $50 an hour, and then 100 or 1.2, 20% more for benefits. So it's $1,200 each in this, direct labor and the benefits. Now, in many businesses, overtime paid is considered part of overhead. It's not thrown into the direct labor cost. That's why we have a separate column for overhead here. So the overhead rate was $25 per hour for each of the 20 hours, and that's taken the $50 per hour times 1.5 times for overtime, a total of $75. But 50 of that is direct labor. The overtime portion, the $25, is overhead. So the 20 hours times $25 per hour with the benefits thrown in, because usually you have benefits when you're paid the overtime hours as well, $600. Now I wanted to point this out, the applied overhead. Now in this company, overhead is applied at 110% of just direct labor cost. Not direct labor cost plus benefits, just direct labor cost. So looking at the 20 hours times 50, that would be $1,000. I know we have 1,200 here because we're adding 200 for benefits. So here's the computation itself. This is the direct labor, $1,000, and this is the 110%, so $1,100. So that's where this number comes from. Okay. So add this across for the 2 people who were paid wages for that weekend, and the total is $5,800. So this is a real small example here. Now other tangible costs, again, state statutes are starting to change the definition of this, and what you could do though, easily find the market value or replacement value of any property that's destroyed, right? External investigation cost, that could be considered a tangible cost. And valuation of lost productivity, that is more and more being treated like a tangible cost. So, these are losses. Again, whether it's tangible or intangible, these losses need to be calculated. Also, another cost is the cost of hiring a private high-tech security firm and a team of forensic experts, specialists, to collect evidence about the intrusion. So again, if you have the attack happen, you could be paying a lot of money to a lot of people to find out what happened, let's stop it, and let's prevent it happening in the future. Lost productivity analysis. This is another loss. If an attack happens, then if people cannot do their job in the company, that's lost productivity. You need to capture that and show that as part of the loss as well. You'll do this because if you find someone and can track them down, and you can go after them for like a business damage lawsuit. If you can't get the DA to assess criminally the charges, then you need to have the dollar amounts so you can sue them for that dollar amount. Let's take a look. This is a more detailed example, sort of long here. Let's just take a look. So we have a virus that infected an email system, and the system was shut down for 6 hours. they have 25 employees. There are 3 of the employees are salaried. They earn $150,000 per year. So it's 2,000 work hours, 40 hours per week, 50 weeks. The other 22 employees earn an average hourly rate of about $35 per hour. And like I said, the system is shut down for 6 hours. Now, employee productivity was lost from 10 a.m. until the end of the workday. So it hit at 10 a.m. They know that, productivity losses increased the longer the system was down. And by the time, 4 p.m. hit, then they told the employees to go home. Now let's see, the 3 salaried employees stayed around after 4 p.m., but the other workers went home. So when they went home, that was a complete loss of their productivity. They were still paid, but they could not produce anything. Now the 3 managers estimated that during the first hour, very little productivity was lost. So there was no loss as to productivity now during the first hour. That's why here we're trying to compute the amount of the damages. During the first hour, productivity level is 100%, no losses, 0 loss over here. Now what they say is the next 2 hours, then productivity level dropped to 70%. That means the loss was 30% of productivity. And they said $597. Not a lot, I would expect it more, but that's what it came out to be. How do they come up with that number? Well, look at the footnotes here. So this cross footnote comes down here. These are the 22 workers who are paid $35 per hour. So we're going to multiply that. Add to that the 3 salaried employees, and you'll get the amount per hour that they earn times 3 of them. And this is for a 2-hour period for the next 2 hours. So we have your $1,999 total salaries, 30% loss of productivity, so only $597. Now this is the loss here. The next 2 hours, you can see productivity switched the other way. We had 30% productivity for everyone, lost 70%, and so the amount of the loss for that 2-hour period was $1,393. You can see same calculations on through here, all the way to here. This is just 70%. Okay, so we're up to 70% loss. That's why this is larger. Now, at the last hour, we have the 3 salaried employees times 90%. They lost 90% of their productivity. That's $202.50 for that last hour. Plus all the hourly employees went home, so that full amount, the $770, is the amount of the loss. So it's for a 1-hour period, so it's $972.50. So this is a relatively small loss here, the $2,962. Let's see if we can get something else added in here. They lost 6 hours of internet service that they had to pay for, and so that's $2,000 more. So at least bumped it to $4,962. Not quite the federal threshold of $5,000, but maybe you can look around and find some other reasonable cost that they were out. So, again, go back and trace that through yourself, all the numbers. Now, intangible losses. Now, the most significant losses are the intangible losses usually, such as unavailability of the website, lost profits. So, again, we're looking at intangible losses now compared to tangible. And sometimes, depending on the definition within a state, the loss could be intangible in one state. The other state might call it tangible. Anyway, you need to compute the loss. Now, website unavailability. This is going to hurt an online retailer. If they're shut down for hours at a time, they're losing money, they're losing current customers, they're losing future customers, they're losing a lot of sales here. Let's see, let's look at, okay, this is a very long example. I'll go ahead and go through this one. Maybe this will be the last example I'll go through. But we have an online music retailer. Their website was shut down for 4 hours. Lost sales occurred, of course, during that 4-hour period. And you have to talk to the website manager, they call them the webmaster and so forth. You might want to talk to the marketing people. and they give you an idea about, well, if the website was shut down for this number of hours, we probably lost this many new customers, maybe permanently. We lost sales from current customers who may or may not come back quickly. And so you have a lot to think about if you're trying to compute losses in this situation. So let's look and see what we have. First of all, we have two general damage estimates you need to compute. Short term, like that day, what you lost, and then the long-term impact. So let's look at the short-term lost sales analysis first. Scroll a little bit more, right there. Down a little bit more, there we go. Now, the webmaster said, all right, when a new first visit customer comes onto the website, the average profit is $100, and the normal probability of selling merchandise on that visit is 20%. New customer comes in, 20 out of 100 new customers, the 20%, will buy something, and the profit is $100. Now with the downtime, then the probability of returning and making that purchase that was lost is only 5%. So you're down to 5% there, during that 1 hour period. Or I guess it's 4 hour period, excuse me. A registered customer, the webmaster says, when they come on, then 50% of regular customers come in, they look around, 50% will buy. When they buy, the average profit is $200. But with the downtime, you're going to lose half of them. What they were going to buy, they're losing half of what they were going to buy. Only 25% will come back and buy that item. So you can see we're looking at immediate losses, and in a lot of these cases, the customer will not come back and then buy that. Now let's make a calculation here. So for the first-time customers, there's the profit. Now we're losing 15%. Usually 20% will make a purchase. 5% might come back, so we're losing 15%. And you can multiply this to get $15. I realize now this column is really not necessary. Oh, and by the way, this number 3 here and here and here, that should be a multiplication sign. I don't know where that came from. Anyway, now they did tell us that on average there are 700 customers, new visits from new customers, 700 of those per hour. And of course, we were down 4 hours. So 700 new people come on board. You're losing 20% of those making a purchase, and only 5% will be recovered. That's why you're losing 15%. So if you multiply all this out, $42,000 was your loss during that 4 hour period. $42,000 from new customers who would have purchased something, but then probably will not. Registered customers, when they came back, they would buy more. We lost 25% of them, right? Was 50, now down to 25, lost the 25 difference. And that's a $50 amount we're losing. 1,000 of them come on every hour, 4 hours, multiply, and $200,000 of lost profits there. And so $242,000 is the loss. Now think about it. This is like just for that 1 4 hour period. It was down, this is what we lost. There can be a long-term effect. Next page. And this example continues. Now what they say, we know the 15% that was lost, and they probably will never come back. So it's 15% that you could have had a purchase from, you're part of that 20%. This 15% will never come back and make a purchase. You lost 420 visitors. You lost 700 per hour, 4 hours, times 15%. You lost 420 potential new customers. Their information that they keep up with to see about visits and purchase and so forth. When you get a new customer, after that first purchase, they come back about 12 times a year, once a month, and then they are a registered purchaser, not a new purchaser anymore. So his next 12 visits, they would generate $200 per visit. You lost 420 of them, and then look at the lost sales here. Multiply all that out, $1,008,000. Big loss. This is for 1 year of these lost customers. And so what you do, you think, well, How long will that last? They do tell you with their information that usually when a new registered customer comes on board, they stay for 5 years, right? And then it sort of tapers off. So for the next 5 years, they're having this kind of loss. They expect them to come back once a month for 5 years, and they're losing that much per year. So 5 years out, bring that back to a present value number, and they tell you they used a 7% discount rate. That comes out to $4,132,800. That's the long-term loss of those customers. And so, again, that's added to this immediate loss of $242. And then what they do, they said, well, try to cut customers back, let's pay $70,000 in coupons, benefit going out. That's another amount to add to the cost. So this total cost for this 4-hour downtime was over $4.4 million. The immediate loss, the long-term loss 5 years, and $70,000 of coupons that reduced, the profit that we're throwing in here also. So $4.4 million, more than that. So you can see again how detailed these computations can get into. And I'm going to let you go ahead and go through this. I'm not going to go through this one. Read it carefully, see where all the numbers come from and so forth. This is a good example. And let's see, it continues there. And we get to the insurance area. I think insurance coverage is very interesting. As a business owner, you really need to know what your insurance covers and what it doesn't. As a forensic accountant, you need to be able to talk with your client about possible claims against the insurance company. So really, 3 parties need to get involved. Your client, the client's insurance company, and you. Go over the coverage, and then when an event happens, you're there to step in and help the client compute the damages that then you can file with the insurance company. So I think these are great bits of information here. I just love business insurance. So read about first party liability coverage, third party. What else do we have? And they continue here. When you're trying to assess the risk, the insurance company might do this. And what else do we have? And getting down to the conclusion. So read this insurance area. It's very, very interesting about what is not covered. And then we talked about insurance in a previous chapter. Whenever a loss happens and it is potentially an insurance covered loss, then you immediately contact the insurance company. You just don't delay. If you wait too long, you look at the insurance policy and find, oh, I waited a day or too long to report it to them. I don't get to collect anything. So anyway, interesting chapter here. Go back and read it in detail yourself. And as always, good luck with your studies.